Hello, my name is Nick Nasad. Welcome to another edition of CMS Forex News. Today is Monday, September 15, 2008. Global stocks were battered today as news spread over the weekend that Lehman Brothers failed to find a buyer and was filing for bankruptcy. Merrill Lynch was bought up by the Bank of America, and AIG reportedly asked the Fed for $40 billion in funds. The implication for the currency markets was a strong return to risk aversion. Though some Asian markets were closed for holidays, financial shares fell hard in Sydney. The Aussie-Yen pair gapped 200 pips in favor of the yen at the Sunday Open and fell further during European trading, sinking all the way to 84.55. The move wiped away the gains seen on Friday, which were a result of optimism that a deal for Lehman's would materialize over the weekend. Stocks in Europe were battered as well, with key European indexes down 5% at the New York Open. The Euro-Yen pair fell 400 pips, also wiping away Friday's gains to test 148.50 prior to the New York Open. From there, it rose 170 pips to reach the 150 level. The Euro-Dollar rose initially in Sunday trading, setting an intraday high near 1.4480. That peak coincided with the European Open and the sharp plunge in stocks there. From that intraday high, the pair slid almost 400 pips to fall below 1.41 before recovering slightly in New York trading. U.S. stocks opened very weak, with the Dow Jones Index opening to a 300-point decline. This pushed the dollar-yen pair 350 pips lower than Friday's level. Some of the initial losses were cut down somewhat in morning trading, but stocks fell again at noon, causing the recovery in this pair to turn around. Just like the yen, the Swiss franc benefited from the increase to risk aversion. The dollar-franc pair gapped 100 pips lower and declined to 1.1055 in European trading. The pair then recovered but was turned back at 1.1280. In Switzerland, producer prices fell 0.5% for the month of August, and the annual rate cooled to 4%. Just like in other major economies, inflation has eased as oil and commodity prices retreated during that month. Also in Switzerland, retail sales were 6.2% higher in July compared to a year ago. That is a welcome sign for the Swiss economy, which had seen this indicator decreasing as the economy came under pressure over the summer months. In the U.S., the New York Empire Manufacturing Index disappointed on the downside, falling to negative 7.4 for September. New orders and shipments were up, but employment fell. Also in the U.S., industrial production for August was 1.1% lower, with the capacity utilization rate declining to 78.7%. The main culprit here was a 12% drop in output of motor vehicles and parts. Overnight, Australia will post its RBA meeting minutes. Japan releases consumer confidence, and Switzerland posts its industrial production. Germany, the Eurozone, and the UK will reveal data on consumer prices. Germany and the Eurozone will also release its ZEW economic sentiment. Tomorrow, the U.S. will release its CPI, data on foreign flows, the NAHB housing market index, and the FOMC will decide on interest rates, though they are expected to hold at 2%. And that wraps it up for today in Forex News. Join us again tomorrow right here at cmsfx.com.